Welcome to Cost Saver Conversations. I'm Angela, and I ask the practical questions so you can quickly understand what matters. Today, I'm joined by Assad.
Hi, Angela. We are unpacking sending money abroad from the UK, timing mistakes, hidden costs, and smarter choices today, and tying it back to the wider cost saver ecosystem, including tools like Send Money Abroad Timing Engine UK, ECB 90-day FX, so you can turn insights into action quickly.
Just a heads up before we dive in, we are your synthetic hosts. We are great with numbers, but as AI, we can sometimes be confidently wrong. Think of us as the digital versions of your most knowledgeable, slightly caffeinated friends.
Exactly. Treat this chat as a smart estimate only, not as professional financial guidance. Always check important details with official sources or a qualified expert before making any big decisions.
So, Assad, sending money abroad, it's one of those things that just feels like it should be really straightforward, right? Like you press a button, money goes.
Yeah, you think so. And honestly, on the surface, it is. But it's one of those areas where people they lose out without even realizing it. The small print is where the real story is.
The small print, always the small print. So, what are people actually missing? Is it all about the upfront fees or?
That's what most people assume, right? They see a 0 or 10-pound transfer fee and think, oh, that's fine, that's the cost. But honestly, that fee is often the smallest part of the problem. The biggest loss, the one that's genuinely hidden, is the exchange rate margin.
Okay, so, I always just kind of assume the rate I see on Google is the rate I'm getting. Is that not how it works?
No, and you're not alone in thinking that. So the Google rate or the one on the ECB website, that's called the mid-market rate. It's the midpoint between what banks paid to buy and sell a currency. And no consumer actually gets that rate. The closer you get to it, the better, but you never quite hit it.
Oh, I genuinely didn't realize that. So, how much of a gap are we talking about?
Well, it depends on who you're using. Specialist providers like Wise or Revolut, they typically add margins of like 0.3 to 0.7% for major currencies. But high street banks, Barclays, HSBC, Lloyds, they're often sitting between 2 and 4%.
2 to 4%. That's wow.
Yeah, and to put that in real terms, right? If you're sending 2,000 pounds, maybe to a family in Pakistan, or tuition to a university in Germany, or a mortgage payment for a property in Spain, a 1% swing on that is $20. Do it monthly, and you're looking at $240 a year.
Just from a 1% difference?
Just from 1%. And over a decade of regular sending, that same kind of, I call it the lazy habit, it can quietly cost you $3,000 to $5,000 in avoidable margin, which is kind of a lot.
That is a lot. That's like a holiday.
Exactly. It's a holiday you're giving to your bank. And look, there are actually 3 costs in every international transfer, and only one of them is obvious. You've got the upfront fee, the exchange rate margin, and then this third one that catches people, correspondent or receiving bank charges. These sometimes just appear as a deduction on the recipient's end.
Wait, so the person receiving the money just gets less than expected? With no warning?
Sometimes, yeah, especially if the transfer routes through SWIFT via New York, which happens more than you think with USD corridors. The recipient can lose anywhere from 15 to 50 to corresponding banking fees. It's not great.
That's really frustrating. And I suppose when you see banks advertising no fees or zero commission?
Red flag almost always means the profit is hidden inside the exchange rate. It's not genuinely free. They're moving the cost somewhere you're less likely to look.
I hadn't thought about it like that. So can you give me like a real example of what this looks like for someone?
Sure, yeah. So take someone like Priya. She's in Reading, sends 800 pounds a month to her parents in Chennai. Using her high street bank, she was getting a margin of around 3.2% plus a £9 fee. That worked out to roughly $34 loss per transfer, which is $408 a year.
408 pounds a year. Just gone.
Gone. But when she switched to a specialist provider quoting 0.5% margin and no fee, her costs dropped to about £4 per transfer. Same money out of her account, but her parents received close to 30 more each month. No extra effort on either side.
Oh, that's actually really reassuring. Like, it's not that complicated to fix.
No, it's really not. That's the thing. The fix is usually pretty simple. It's just that most people don't know there's a problem in the first place.
Right. Okay, so let's talk about timing, because you mentioned people making timing decisions based on hunches. What are the big mistakes you see?
Okay, so the most common, by far, is just transferring on payday without checking the current rate at all. Just money comes in, money goes out, no thought given to where the rate is sitting. And then close behind that is the opposite extreme, waiting weeks for a rate that must come back to where it was last year.
Oh, I've done that. I've definitely done that.
Everyone has. And then what happens is a scary headline hits, you panic, and you lock in a bad rate anyway. So you've waited and you've still ended up worse off.
Yeah, that sounds about right. What else do people get wrong?
Splitting transfers into tiny amounts so you're paying fixed fees each time, which adds up. Ignoring the recent rate range and just accepting whatever appears at checkout. Using cash pickup services when a bank deposit would cost half as much. Oh, and this one's really common. Forgetting that weekends and bank holidays lock the rate at Friday's close. Some providers widen their spreads on Saturday and Sunday because the interbank market is closed.
I didn't know that about weekends. So you're potentially getting a worse rate just because it's a Saturday?
Potentially, yeah. It's one of those hidden costs that doesn't show up in the quote. There are actually a bunch of those. Card-funded transfer surcharges, for instance. If you fund a transfer with a credit card, that can trigger a cash advance fee from your card issuer plus interest from day one.
Ouch.
Yeah, and then there's swift tracing fees if a transfer goes missing. That can be 20 to 70 pounds. Minimum transfer thresholds where it's free above £1,000 but expensive if you regularly send 300 pounds. Inactive account fees on multi-currency accounts you opened once and forgot about. It's just a lot of little things.
It's like death by a thousand cuts, you know?
That's exactly what it is. And I should mention, cash pickup services where the recipient goes to a physical agent to collect, those are convenient, but they often carry the widest margins of any option. Use them only when a bank deposit is genuinely not possible.
Good to know. Okay, so what about those 90-day forecasts you see from banks? I feel like people put a lot of stock in those.
Ah, the 90-day forecast trap. Yeah, look, those forecasts, they're useful for corporate treasurers hedging millions, but for a one-off personal transfer, they're a poor guide. Currency markets react to interest rate decisions, inflation data, political shocks. Even the sharpest forecasters get the direction wrong regularly. And the size of moves is even harder to call.
So if a bank economist can't predict it,
Neither can you. Exactly. So instead of forecasting, I always say, look backwards. Check where today's rate sits within the last 90 days. If it's in the top third of that range, it's a reasonable day to transfer. If it's in the bottom third, wait or use a limit order. Does that make sense?
it does, yeah. So you're not trying to predict the future, you're just checking if today is objectively not terrible.
Exactly. That's the whole philosophy. Remove the emotional guesswork.
What about if someone has a really big amount to send, like they've sold a house or received an inheritance?
Right. So for large one-off transfers, the timing decision matters more because it's all concentrated in one moment. For regular monthly transfers, you naturally average out the highs and lows over the year. But with a lump sum, a sensible middle path is to split it into 2 or 3 tranches over a few weeks. You give up the chance of hitting the absolute top, but you also avoid the disaster of putting everything through on the worst day of the quarter.
Fair enough. Hedging your bets, basically.
Basically, yeah.
So let's get into the tools then. If we can't predict the market, what can we actually use to be smarter about this?
Okay, so there are 3 tools worth knowing about. First one is rate alerts. Almost every specialist provider lets you set a target rate, and when the market hits it, you get an email or push notification. This is, honestly, it's the single most useful feature for anyone with a non-urgent transfer.
So you just set it and wait?
Set it and wait. But, and this is important, set your alert around the top of the recent 90-day range, not at some fantasy level that hasn't been seen in years. If it triggers, you act. If it doesn't trigger before your deadline, you transfer anyway. Simple discipline.
Right, right. And what was the second tool?
Limit orders. So this goes a step further. You tell the provider, buy euros for me if GBP/euro hits 119, and they execute it automatically, even at 3 a.m. So you don't miss a good rate because you were asleep or, in a meeting or whatever.
Wait, really? And that's free to set up?
Free to set up, costs nothing if it never triggers. Wise, OFX, Currencies Direct, they all offer these on major pairs.
That's wild. I had no idea. And the third one?
Forward contracts. So this is it's for anyone with a known future obligation. You lock in today's rate for a transfer up to 12 or even 24 months in the future. You usually pay a small deposit, often 10%, and settle the balance on the agreed date.
So, like, if you're buying a property in Spain and completion is 6 months away?
Exactly. You lock in the rate now, you know exactly what you're paying in pounds. And look, for property purchases abroad, a forward contract on the deposit and completion amounts can save you tens of thousands of pounds if the pound weakens between offer acceptance and completion.
Tens of thousands. Yeah. So, which provider should people actually be using? Because I imagine it varies.
It does. It really does. It depends on the corridor and the amount. So for small amounts to the Eurozone, like $100 to $2,000, Wise or Revolut typically win on cost and speed. For India, Pakistan, Bangladesh, Philippines, Wise, Remitly, and Zoom often beat banks by wide margins. For Africa, Nigeria, Kenya, Ghana, Sendwave and WorldRemit have strong local payout networks.
And for the bigger stuff?
For large one-off transfers, anything over $10,000, specialist brokers like Currencies Direct or MoneyCorp offer negotiable rates and a dedicated dealer. And for property purchases, always use a broker with FCA authorization and safeguarded client funds. That's non-negotiable.
Can I ask a slightly anxious question? Because I think a lot of people worry about this. Does opening like a Wise account or a Revolut account affect your credit score?
No, it doesn't. These aren't credit products. And all reputable UK providers have to safeguard client funds under FCA rules, meaning your money is held separately from the company's operating account. You can close the account anytime, no fee, so there's really no risk in trying it.
Oh, that's actually really reassuring. Okay, so a couple of special situations before we wrap up. What if it's an emergency? Like family needs money right now.
If it's emergency, timing doesn't matter. Speed and reliability do. The key thing is to use a provider you've already verified, so you're not stuck in identity checks during a crisis. That's actually one of the best reasons to set up an account now, even if you don't need it yet.
Smart. And what about tax? Do you need to declare large transfers?
So HMRC doesn't tax the act of sending your own money abroad, but income earned overseas and remitted here can be taxable depending on your residency and domicile. Large transfers may need to be declared either in the UK or the receiving country. It gets complicated, but the transfer itself isn't the taxable event.
Good to know. And one more. What about volatile currencies? Like, I'm thinking Turkish lira, Nigerian naira.
Yeah, pairs like GBP-TRY, GBP-ARS, GBP-NGN, spreads can be much wider, and rates can move sharply on political news. The advice there is transfer sooner rather than later, and if it's a larger amount, split it into tranches. Don't sit on it hoping for a better rate because the downside risk is much bigger with those currencies.
Right, that makes sense. Okay, so Assad, let's bring this all together. What's the simple system people should follow?
Okay, so here's the template. Step 1, decide your normal transfer amount and how often you send. Step 2, pick one primary provider and one backup based on your corridor. Step 3, set a rate alert around the top of the recent 90-day range. Step 4, set a hard deadline by which you'll transfer regardless. If the alert triggers before the deadline, you transfer. If it doesn't, you transfer on the deadline anyway, no regret. And then review every 6 months to check your provider's still competitive.
That's it?
That's it. No forecasting, no panic, no endless refreshing. And I really believe this. Consistency beats cleverness in FX. A boring, disciplined policy applied to every transfer will out-earn a brilliant one-off call. especially once you factor in all the transfers you never got around to timing at all.
I feel personally called out by that last bit. Okay, so just to recap for everyone, the two big wins are 1, choose a provider with an exchange rate margin under 1%, and 2, use tools like rate alerts or limit orders so you're not transferring on genuinely bad days.
Spot on. And the practical first step, it's small. Open one specialist account this week. Verify your ID, run a test transfer of 100 or 200 pounds just to see how it works end to end. Once that account exists, you've removed the biggest excuse for defaulting to your bank the next time family calls. Over a decade, that difference runs into thousands of pounds. It's worth 10 minutes of setup.
10 minutes! That's less time than it takes to make a proper cup of tea. Assad, this has been brilliant. Thank you.
Thanks, Angela. Happy to help.
Quick side note, this guide connects with other cost-saver blogs, especially UK town job market mistakes, postcode crime and rental risk, and About page.
Exactly. And reading those together helps you connect the dots across your household budget, not just this one topic in isolation.
And if you want to apply this immediately, jump into tools like Send Money Abroad Timing Engine UK, ECB 90-Day FX right after this episode.
Primary sources used here include Which, Guide to Sending Money Abroad, and Money Saving Expert, so you can verify the data yourself and stay evidence-led.
That wraps this cost-saver conversation with Angela and Assad. If this helped, share it with someone who could put these ideas to work this week.
Your next step is simple. Try Send Money Abroad Timing Engine UK, ECB 90-Day FX, then read UK Town Job Market Mistakes and use them together to take action today.